This is Satya Pradyuman of Cirrus Research. The latest issue of the Risk Metrics report, titled "The Risk Backdrop Highlights the Chasm Between the East and the West." A lot of what this report about is this great divide we're beginning to witness as markets begin to scatter. What we've gone through is a massive profit cycle slowdown, incredible interest rate risk, and if you fast forward a couple of years later, what we're starting to see is some sort of stabilization in the system, but it's not monotonic. This bubble chart that you're seeing reflects the two traits here. On the x-axis is risk aversion, and on the y-axis is market crowding. Two, we think, really important tactical variables that we tend to look at. At the heart of this, if you were to go back a year or two ago, what you would have seen was a lot of these markets were clustered in the middle and more to the lower left panel. What that meant was the markets or investors were very risk averse and there was no leadership in the market. What we have seen in the last 6 months or so is this sort of collapsing of risk taking has started to expand. And what we're now seeing is these markets are now starting to separate more aggressively. At the heart of this, what we can find is that there's a degree of risk taking that has taken on a larger role, the most extreme of which is in the UK, and right up there is also the US. In addition to that, several key markets are now crowded: US, UK, Canada. So what we are now saying 18 months really after aggressive interest rate policy across regions is that the profit cycle may end up being stabilizing from the massive slowdown we've witnessed in the last couple of years. This chart to the left is super interesting because what it's doing is we called out one of our key variables, the risk appetite reading for a given market. And what you'll notice is really a tale of East versus West. The risk appetites, for instance, in Japan, Asia Pacific, are corralling and really fading fast, while we've begun to witness the US and the UK markets where risk appetites are starting to re-accelerate. So the question is, what is underneath this? And a lot of this, I think, has to do with China. The difference in the profit cycle and the earnings expectations is that the West and most of the key markets, we're starting to see a rebound in earnings forecasts, while we continue to see flat to slightly down estimates still for China and related markets. So I think this fundamental wedge is driving this market pattern. Some of this makes sense. I think to some extreme, we're going to have to revisit the West as well. But for now, I think this trade, this sort of opening, seems to be real and meaningful. With any questions, feel free to reach out to us. Thank you.